Hello everybody, welcome back. Let's have a look at Bitcoin and a little glance at traditional markets because as we all know, they're all very much tied together at the moment. In fact, they're pretty much the same thing. There's not a great deal different than it, other than that Bitcoin is like it's like an amplifier, isn't it, of traditional moves. So it was a fine bounce yesterday, so we finally did get a bounce. I mean, it was okay. I mean, the day before we tried to suck back into the Bollinger Band, wasn't having any of it. And this is the sort of reaction we're looking to have. But the question is, where's it going to go from? So it chose to bounce from specifically 32,800. I mean, this entire range is the CME gap. It's one massive gap. So I mean, we can talk about Bitcoin bouncing particularly on a specific level. But you know how we talk about altcoins bouncing on their own charts, but really that move has been dominated by Bitcoin's bounce. So Bitcoin bounces and then altcoins bounce. Then you look back at that altcoin chart and go, well, why did it bounce from there? I mean, there's not really an enormous amount of history there. There's nothing, you know, truly tangible. Yet it's printed a bottom, or in the case of the summer, they printed double bottoms. But then you look at those charts and go, well, there's double bottoms there. That's fine. But why? And the question is because Bitcoin printed a double bottom. Wherever Bitcoin wanted to print the double bottom, 1, 2 here, and then altcoins just follow that. So their charts become less relevant in that sense. And I think that's basically what we're seeing here with Bitcoin. The bounce here, yeah, it took place within a CME gap. You know, it was getting 33, or just below 33,000. I mean, you know, if we look back in time, I mean, there's the low 30 range is reasonably choppy, but there's nothing really that matches that particular area or that specific wick, should I say, to bounce from. But if we move over to traditional markets, so we don't need Bitcoin dominance for the minute. It's still the same deal as yesterday, really. Looking for a potential rejection from this level, meaning that altcoins could have a little bit more life in it still. But again, just talking about bounces. Let's have a look at the Nasdaq, and I'll show you something pretty impressive I just saw this morning. So, not Nasdaq.com. What am I doing? Oh, I've been up for ages. Both my girls have got snotty noses, and both in bed with me last night. And basically, it's just turned me into a daddy sandwich, and it was awful. So I've hardly had any sleep. So gonna definitely have a little power nap when I finish this video. So here we go. So the Nasdaq bouncing, front running ever so slightly, but bouncing more or less from this horizontal support level. That makes a bit more sense, right? So traditional markets finding a little bit of relief from specific areas on their own charts, and then carrying Bitcoin as almost like in the back seat, really. I think that's how I'm choosing to interpret what's going on here. So this is Nasdaq on the weekly so far. It's up a decent amount for the week, and obviously the week is young. It's only Tuesday. So 3.73 so far, and we compare that to Bitcoin's weekly bounce, which is so far. Let's just measure this. 15. So obviously this is what I mean. Bitcoin emphasizing whatever it is that traditional markets do, whether that's up or down. We've more or less said that the entire way, especially when it came to this level here, when we said, look, we better consider de-risking stocks if we're in them, and also I suppose crypto by association. This was because of the virus, the new virus that came out, the one that was capable of using machetes. And so we had to adjust for the fear in the market, because no one wants a new virus that's capable of using bladed weapons. It's all a joke, by the way. The virus can't do that. Not this one anyway. Who knows? A bit further down the line, we could have viruses do all kinds of stuff. But for the minute, it was just a new one that came out and fear in the market. And we said, look, let's de-risk, especially from stocks, but through crypto, through association. It's like what we expect, what we saw in March, rather than expected it. Some people expected it, and others, like myself, kind of got out towards the end of that move and just narrowly avoided the last big crash part of it. But this time was a little more wise and saw it coming. So it's traditional markets are basically all the same thing at the moment. This is seen as a risky asset, similar to that, and an overinflated asset, similar to Nasdaq. Really, I suppose you could argue that they're both more or less trending as one. And so with that in mind, there's there is things we can do on this chart, I suppose, mainly small-term time frame stuff. But again, you know, when trading an altcoin, you have to look at Bitcoin. Now, when trading Bitcoin, you have to look at, I suppose, Nasdaq and the Dixie, and both of those aren't looking to do anything other than what they're already doing. So Dixie recovering quite well so far, doing pretty good. This is Dixie on the weekly, above all major moving averages once again, looking like it wants to trend up. And look, we're about to. Well, it's gonna. This is a weekly here, but if we close above the exact level that we're at right now, 96.1, we're going to get a continuation signal on the Ichimoku cloud on a weekly. So that would mean that this trend is almost certainly going to continue up, break through this level of 97 and up. Now again, there are differences when looking at the Dixie, because it's well, I mean, it's manipulated to the largest extent, isn't it? And you've got the Federal Reserve, that's their job, to manipulate that. But this is what the chart says. So we close the candle body here, which is basically 96.1, which is exactly where we are at this very moment in time. We close the candle body there, we get a Chiku span above the cloud, we get a confirmed long, which isn't a trend continuation long. It's a long that's that has one more move in it. That move could take us all the way up to this level here, which is post, you know, pre-pandemic levels. You know, the peak of the pre-pandemic levels before it all went crazy. So we do have to bear that in mind. Again, that's a week. We've got to wait for this weekly to close. So Friday, we'll see what goes on Friday. And to be honest with you, Friday, and then it'll be confirmed by Monday next week. So we've got 6 more days really to see that signal get generated and solidified, and that would, like I say, mean a stab up. You know, probably quite an aggressive one. The Dixie's not in any way as bad on the weekly as Bitcoin is. Bitcoin is broken down below its cloud and is toying with the idea of creating a short signal, you know, on a long-term time frame. Dixie's not like that. Dixie looks like it's having a fine old pullback, and it could continue down further, but for the moment we're bouncing from an obvious position, which is this rough level, about 13,000 basically, give or take. So transferring all that over into Bitcoin, yeah, we're having a bounce here, but it's traditional markets that are driving it, and we can look at this chart and we can anticipate our new lows or our next lows that might get formed. We can also expect our next level highs, you know, so the next major level highs are going to be these moving averages, the 10 exponential, which is currently coming in around about 38 today. You know, breaking above there would be good, and we could look for a push all the way up to the top of that this major area, the 40,000, which was lost so dramatically just the other day. So that would be very much on the cards. That's also where the centre of the Bollinger Band and the 21 exponential is at the moment. So 40,000, 41,000 even. That's not out the realms of possibility, right? You know, there is likely to be a bit more upside on this one from this particular bounce, if traditional markets can carry on with its bounce, which it kind of looks like it is. This is a little bit of no man's land between now and tomorrow, in fact, where the Fed are going to talk about something. And you know, my experience, because I used to watch those things when I traded traditional markets. I used to watch those things, and they're really good at saying things. They're good at saying words generally. You know, lots of words come out that aren't really. They don't mean much, right? However, you know, there will be questions, no doubt, asked, and those questions might need direct answers, and that's where we might get some. So we'll have to keep our ear to the ground to see what's going on with that tomorrow, because that's going to either cause a bullish move or a bearish move. But considering everything's been going down for such a long period of time now, basically Nasdaq, this is the weekly, obviously, I think the anticipation for some light relief from the Fed has initiated a front-run move for traditional markets, which may continue on. Now we could easily get knocked down at this level, easily get knocked down at this level here, which is 14,000. That's the area. That's where we held. That's where we found we tested. Found it to be too much to bear, and we came all the way down. This is a big deal, really, for Nasdaq here. It's a big deal. Just over the last couple of days, when we retested that what used to be support as resistance, and we wrecked it basically up to retest, and then all the way back down to the lower levels. And if we think about that on the daily, there's no moving averages below us at all. And go to the weekly, I mean, the moving averages below us are a lot further below us, and we'll be in the same situation as Bitcoin, really, where we're looking to really retest some significant lows based on its on its long-term time frames. And if we check here on the monthly, I mean the monthly for the Nasdaq is basically retested and bounced from the 21 exponential on the monthly. And this is the interesting thing. If you think about that, so we've got the center of the Bollinger Band and the 21 exponential there being retested. What do we have for Bitcoin on the monthly? We also have basically the same kind of read. It came down to test its center of the Bollinger Band on the monthly. If it were to ever load, we could show you that. So this is what I mean. The charts in the short term, they're mimicking each other. Everything is copying the traditional markets. On the weekly, Bitcoin's looking pretty tired and sad, whereas Dixie could quite easily recover from this zone. The Nasdaq, that would be easily recover from this zone. And the monthly, the two charts have basically they've come down to more or less exactly the same levels. So the monthly, they're both equal. Which means that I suppose if there were to be some good news for traditional markets, Bitcoin's going to rip. It could seriously rip up, which is the hopium, I would say, because Bitcoin isn't really trending on its own. It's trending in association in the backseat of traditional markets at the moment. So, with all that said, we can look at the Bitcoin chart and we can maybe scalp it. We could look for longs and shorts on the short-term time frames for those of you who are fond of derivatives. For those who are looking to hodl, the worst case scenario is that we get that short signal we spoke about yesterday on the weekly, and that's not going to be confirmed for quite a while. And a confirmation of that size could bring it down. It's sizable, a massive move. 20, 30, 40%, who knows where. And so all these levels that we've got below us are kind of relevant, and probably some in between, because again, this will trend down in association with traditional markets. There might be a spot around 24,000. So without turning my chart into something that resembles a zebra, we'll mark those off if we start breaking and closing down below 28. And that, to be honest with you, we think about these kind of levels specifically. If we had that short signal, and let's just say this is where we are now. That's a 20% down to the summer lows, and then the next major low down here. This would be huge. It would be about 18. So people on my Telegram, they contact me, especially when things are moving down and when things are going up. They send me all these DMs and that, and I try to reply to them. But that's what the Patreon's for. I prioritize people from the Patreon, obviously. But when people hear the word 18,000, they think, right, well that's it. I'm going to put buy orders down there and just chill out. I'm going to wait for 18,000. That doesn't have to happen, and it might not, and it probably won't, to be honest with you. But it is a level that has to be marked off. Doesn't mean it has to happen. Same with this one down here, 12,000. Some people might go, I'll tell you what, I'll just put a buy order in 12,000, and I'll wait for that to get filled. That's really not the best way to play any of this. The best way to play this, in my opinion, is to incrementally buy at these specific zones. So I bought back for the first time around 40,600. That was the first buyback after selling around 53, 54. So sold a fair bit here. Started to buy back here. Bought back as well here in the CME gap. And the next area I'll be buying back would be about 29,000. Same place I bought the dip around here. So incremental steps down. Not all in. Never be all in, never be all out. All right, we're coming down. This is the opportunity that most people want. They want to buy Bitcoin low. No one knows exactly how far it's going to go. It could completely just go to zero. Obviously, everything could. And the thing is, we're trading this chart as almost like as a proxy to the traditional markets at the moment. So there is that. And with the dollar looking like it wants to continue up, I mean, it doesn't make this look great. But then we all understand that the dollar is manipulated on purpose, to try and balance inflation and economic growth. It's a difficult one for them to try and to balance, right? It's like walking a tightrope, right? So we can't really look at the Dixie specifically and go, well, actually, the uptrend is good, but I think we're looking for want of a better word, maybe like a blow off top moment for it, and then a consolidation and then a balancing out. But it doesn't necessarily mean that Bitcoin and traditional markets can't move up as a result of that happening as well. It's just unlikely. So in a nutshell, you know, this was a nice move, and the buyers stepped in. It's the first time we've seen a wick like that since this one over here, and this one held us up to a large extent for quite a while until we finally broke down to the lower side of the range and then broke down even further. So the buyers stepped in. That's good. That's a good looking wick. I'm not looking for any massive downsides probably throughout this week now. I'm looking to probably try and establish a range between the CME gap area, so that's between 34,500 and a resistance all the way up here at 40 to 41. Remember, we do have this downtrend of resistance, which is still extremely relevant because we've had such significant reactions from it. Bang, all the way down. Whereas the last time then we banged all the way down, and then just recently we banged on it here and came all the way down. So this again is another area, and unfortunately it does trend down. So it's like an electric fence for the price action here. It just does not want to touch it, and if it does, it retreats to a massive extent. So I've talked long enough, and I think I'm going to have to go for my power nap now. But yeah, I hope you have a nice day. Trade safe, because you know, like I say, there's so much uncertainty in all markets right now for many reasons. You know, so there is an enormous amount of uncertainty. So we can look for this to play out this little portion of this range, which in many ways is like a descending triangle. This is kind of what we're looking for. We're probably, with this kind of setup and this kind of direction, and a potential short signal on the weekly, we should probably expect further down. But if we broke out of this descending trend line, that would be something like a major foothold in the bulls court. Really, that would be a very decent reclaiming of potential chart structure at that stage. So I'll leave it with you again. Yeah, hope you have a nice day, by the way, and yeah, take it easy.